Hello and welcome to Retirement Today. My name is Jenna Carnes, founder and financial advisor at Beacon Wealth Advisory, and we're here to help get you to and through retirement with financial peace of mind. If you'd like to listen to this podcast or any of our past podcasts, you can go out to Spotify, Apple Podcasts, and Amazon Music, or you can view us on Beacon Wealth Advisory. And if you have questions on anything you hear on the show today, you can give us a call to schedule a complimentary consultation at 1-800-994-8993. Again, that's 1-800-994-8993. Before we get started, I want to bring on my co-host, Jacqueline Gladhill. We do match again today. We didn't even call each other,
Yes,
right?
I don't even get this, Jenna. I mean, every single time it seems like we're matching in some form, but I will
I
say,
know.
I mean, blondies, we know what works on us.
Yes, we know our colors. We did our color analysis, and we're just, we're soul sisters, aren't we?
Yes,
We really
exactly.
are.
Exactly. We just read each other's mind from all the way
Yeah,
across the country, not talking. We just
right.
know.
We know. It's an orange kind of day, right?
Exactly, exactly. Well, Jenna, I mean,
So,
today we're going to be diving into a brand new education free tax credit, which I've never even heard of. And it can quietly save families thousands of dollars each year, which sounds amazing. Even those families who may be already investing heavily into those private education, tutoring and enrichment.
yes. I don't know if I've ever shared this with you, Jacqueline, but I've been on a school board serving now for the last 2 years. And all of my colleagues that are on the school board are just talking about this so much because it's such a blessing. It's going to, I think, encourage more people to get involved and support private education just because there
Mhm.
is an actual tax credit that can help out. So that's where I first heard about this was when I was volunteering on the school board, and we're all really excited about it over there. So let's start with the basics. So the education tax-free credit is a dollar for dollar reduction in your tax liability for qualified education expenses. That's important because high income families often pay full price for educational experiences.
Mhm.
And the Educational Freedom Act really was created on July 4th, 2025, as part of the One Big Beautiful Bill Act.
We've heard
And
that before.
oh yeah. It first applies to donations made on or after January 1st, 2027. So kind of coming into this next school year.
Mhm.
And taxpayers will claim it for the first time during the 2028 filing season on their 2027 tax returns. But people need to know about it because it's going to be available, after January.
Yeah.
So,
Well, that sounds amazing. And I know that, these educational experiences certainly can cost you.
oh, yeah, I definitely know firsthand because our kids, all three of them, attend a private school. And according to the National Center for Education Statistics, the average private school tuition, Jacqueline, in the US is $12,350 per year. Okay.
Per
But for,
child?
yeah, yeah, per child.
Wow.
Yeah. But for like the elite private schools, it's often 25 to 55,000. And then even like specialized tutoring can cost a lot. The Education Industry Association reports that high level academic tutoring averages 80 to $150 per hour, with some programs even exceeding $200 an hour. So, you know, these
Wow.
definitely these costs definitely add up, especially if you have multiple kids, right?
No kidding. No kidding. I mean, I went to a private college, but I did not go to private, uh, for primary school or anything like that. So basically, I mean, if you have ambitious kids out there, you're investing like crazy.
Yeah, you really are. And of course, then inflation and everything else goes up, right? So,
Absolutely. Well,
yeah.
I mean, so Jenna, you promised that, you'll share real life examples with us and of how this new educational freedom tax credit works. And I love a good story with
Oh,
numbers
yeah.
included or examples. It makes
Yeah.
me feel like I'm really kind of on Shark Tank here.
I love that show. By the way, who's your favorite on Shark Tank? Just out of curiosity.
Mm, Lori?
You like
right?
Lori. Why do you like Lori? Just curious.
Um, because I can see myself a little bit in her.
Okay. Yep.
Yeah, what about you, Jenna?
Strong, blonde, tells it like it is, right?
Yeah, yeah. I need
Uh,
that bold energy.
I know, I know. I really like Barbara because
Okay.
she's very intelligent, but kind of soft spoken, and she kind of
Yeah.
waits just for the right time to put offers in. She's actually
Mhm.
very, very intelligent. So I don't know. That's my
And
favorite.
she
But
always comes after the guys. Like,
I
it seems like
know.
she always gives her offer after the guys,
Yep.
and it just is, like, the better offer, so then that's how she wins.
Yes. Yes.
Mhm.
Yeah.
I
She's
love
not
that.
like the most aggressive, but I think she's like the most strategic.
Mhm.
And so I like that. Anyway, okay, good. Well, this tax credit is basically like the government saying, hey, if you support K through 12 scholarships, we'll knock money off of your tax bill. And so starting in January of 2027, it's up to 1,700 per year.
Okay. So, Jenna, I just wanna be clear here for our listeners and I guess for myself too, but this isn't based on income, right? So, the high income families can also use this.
Exactly. And that is a big deal because most of
Mhm.
these, credits and deductions are usually for people under a certain
Mhm.
income level. So even high income families can use this too. No income limits. And again, that's what makes it so interesting, even for, higher net worth families. The only thing that matters is your tax liability because the credit is non-refundable. Now, of course, you need to have a tax bill to actually absorb the credit, but yeah, it's neat that they're doing this for everyone, right? No matter
Yeah.
how much income they make.
Yeah. Well, so I got that part. So, can you show me the money now?
Yeah, of course. I'll show you the money. So let's start with a real life Kansas couple. They're filing jointly, making about 145,000 a year, and their federal tax liability is around 11,800.
Okay, so they're doing
Common.
pretty good, right? I mean, probably drinking the good coffee here.
Yep, living the good life. So let's say they donate 1,700 to an approved scholarship granting organization. They're called SGOs in 2027.
And again, that donation gives them a tax credit.
Yes, dollar for dollar. So their tax bill goes from that 11,800 down to 10,100.
Wow. So they basically bought themselves a, $1,700 discount on their taxes by supporting the scholarships. Or, I mean, if
Exactly.
we're talking about girl math here, they just saved, $1,700.
Exactly. Yeah. And again, for families with higher incomes, this is a clean, predictable way to reduce a tax liability. While again, having your money means something, and supporting educational access.
Mm-hmm.
So we always talk about that, how important it is for your money to mean something.
Yes. Well, Jenna, I do want to get into maybe a single parent here. We've talked a lot about, higher income families. But
Mhm.
what about someone who doesn't have a big tax bill?
Yeah, great question. Let's say there's a single parent earning 38,000 a year and their federal tax liability is about only $1,250.
Well, so if they
So,
donate the full 1,700, then what happens?
well, they can use only $1,250 of the credit because that's all the tax they owe. The remaining
Oh,
$450 just disappears. The credit doesn't refund or carry forward, but it does help them, right? I mean,
yeah,
they're
yeah,
probably excited because they don't have a tax bill.
yeah. I mean, so it helps, but just not the full amount, which is okay. I mean, it still is
Yeah.
helpful.
Yeah, yep. The credit is most powerful probably for people with higher tax liabilities, right?
Mm-hmm.
So because they're not used to getting many tax benefits either. I hate to say it
Yes.
that way.
Yes,
So
agreed. Well, now that we've kind of, hit the basics here, I want the drama. Give me the drama, Jenna. Give me a big wow example, maybe the big money example. I want to hear rich,
yeah,
rich.
right, right. Well, let's say someone earns about 420,000. I can think of a client of mine who is a pilot and she makes that or even a little bit more. Their federal tax liability, let's say, is around 105,000. Ouch.
What? I mean, that's a lot of taxes.
Yeah, it really is. So they donate, let's say 1,700 to an SGO. again, a scholarship granting organization, their tax
Mhm.
bill at least drops from 105,000 to 103,300. It's not a huge drop, but hey,
Mhm.
they'll take it, right?
Yeah, so they get the full credit without really blinking.
Exactly. So for
Yeah.
high income families, this credit is almost guaranteed to be fully usable. It's simple, predictable, and aligns well with charitable giving strategies, especially if education is important to you, private schooling,
Yeah.
right?
Yeah, absolutely. Well, so I think we should do a quick recap here. I just want to make sure that I have all this information straight because, it sounds a little bit too good to be true. So Jenna, tell me if I'm right here. There's no income limits on this. You need enough tax liability to use the credit. You donate to an approved SGO. You
Mhm.
get up to $1,700 off your federal taxes.
Mhm.
And it's basically a win-win here. I mean, you help kids access education, great education, and you reduce your tax bill.
Yes, you got it. I mean,
Woo!
you absolutely slam dunked that. And for high net worth families too, this is one of the cleanest tax efficient giving strategies we'll probably see in 2027. And it
Mhm.
just feels good. It feels good
Yeah.
to be a good steward over your money and help donate to scholarship funds so that kids that normally maybe couldn't afford to go to a really nice school can go to one, right?
Yeah. Yeah, I mean, I love it. It's like philanthropy with a coupon.
Exactly.
Who
Yes.
doesn't like a coupon?
I know, I know. We love coupons, right? But it's a very, very classy coupon,
Yeah.
right?
Oh, good point, Jenna. I mean, this was actually fun. I mean, numbers and all included,
Yeah.
examples. It's
Yeah.
great.
Thank you. Yeah, tax credits can be fun when they're worth 1700. I mean, 1700 is a lot for some people, right? Or it can
Jenna,
go a long way.
Jenna, you should put that on a t-shirt.
I would wear it. Absolutely, I would wear it. Promoting kids scholarships? Are you kidding me? I'd do it.
Oh, well, you're making me emotional again. I mean, and that's beautiful.
Oh, that's sweet. Well, and the last thing I want to share too is it's really important, especially for families that really get into this, to track your education expenses, document everything. Definitely work and coordinate with your CPA. I'm a financial advisor, but work closely with CPAs with our clients to really help our clients still maximize those tax planning opportunities. But especially if you have some income, maybe even some business income, and you want to support K through 12. This is a great opportunity, and it's great to integrate with your broader tax strategy. Some of you listening may also have charitable giving, donor advised funds, business deductions, trust planning. This is just another strategy that you can add to that broader charitable tax planning strategy that you have. And really, again, you can use the credit to justify higher quality educational investments because this credit really offsets part of that cost.
Mhm.
So I just love this. I think it's great when the government can incentivize people to help kids just really invest in their education more. You
Yes.
know?
Yes. And Jenna, I just want to point out something that you even said. It's not about saving the money necessarily. It's not about writing off the coupon or girl math, saving money, but it's about optimizing money and truly putting it again to that purpose and having an intention with it. And using strategy. And those are all keywords that we talk about almost on a daily, but especially on our podcasts.
Yes, and it's a way so many of us listening have it on our hearts to leave a legacy. But we talk about how you don't always have to leave the legacy after you pass.
Mhm.
I think that leaving a legacy while you're alive is something that is wonderful. In fact, I will just share a personal story that I did donate some money to a scholarship program this last year. And so one of the girls going into our kindergarten this year has it completely paid for. And she wrote me a little card just saying, how much it meant to her and that she would have never been able to afford to go to this particular
Yeah.
school. And just how big of a difference it makes in her life. And I will just tell you personally, when I read it, I got all teary eyed and just felt like just so much more satisfaction from any investment I could have made.
Yeah.
Like it was just such a beautiful moment to know that, God used my resources to bless this
Mhm.
little girl to be able to go to a kindergarten that she never in a million years would have thought she would have been able to afford.
Mhm.
So it's just a great way to steward your money and again, have it mean something and make a difference.
Well,
So
and Jenna, I mean, it's not just about the child either. I mean, you talk about that little girl, but it's about her family too, and about what,
yeah,
it extends so much beyond what you think it does. And
yes.
such a little small act could really be a ripple effect into so many people. So what a blessing that is.
I know, I know. I'm gonna be looking for her, walking down the hallway and I don't say that to brag or anything. I wanted to share that just because I personally know how fulfilling it can be to
Mhm.
watch using your resources to just bless somebody that, never would have thought in a million years they would have been able to afford that kind of an education.
Mhm. Mhm.
So yeah, I mean, that's basically what we were going to cover today. If people are interested and want to learn more about how this credit fits into their broader wealth plan, we'd be happy to have you reach out. Families, like I said, qualify for more than what they realize sometimes, and there are just so many different creative
Mhm.
college planning investment tools out there too. And so this is one tax credit that can help, but there are a lot of other college planning or education planning investment tools out there. So we would love to sit down with people and really talk about this tax credit, but also if they have it on their heart to possibly save for grandchildren or children for college
Mhm.
or school, even
Mhm.
K through 12. We would love to chat with people, right?
Yes. Well, thank you, Jenna. And, I just want to remind our listeners and viewers that wealth isn't just about numbers. It's about legacy, opportunity, and giving your kids the best shot at the future that they deserve. I mean, how could people get a hold of you, Jenna, and the team there to learn more about the tax credit or talk about maybe college financial planning strategies?
Yeah, yeah, we would love to talk about this. You can give us a call at 1-800-994-8993 to schedule a consultation. Again, that's 1-800-994-8993 to schedule that complimentary consultation.
Well, thank you, Jenna. And before we go, we have a special announcement for our listeners and viewers that sadly, this time and this podcast is the last one that I will be on as a co host. But Jenna will continue doing great things on the podcast. She will always be available to, give her a call, give her team calls. Great person. And it's been such a fun thing to do with you, Jenna, and just share our personalities. I really do think that we work so well together.
We
And
do.
honestly, we've had so much fun on this podcast.
We have. Yes, we will miss you so much, and you've done an amazing job. So thank you for everything you've done on the show, and we wish you the very best. And if you change your mind, let us know.
I will. Well, thank you, Jenna. Now you're going to make me emotional. We have an emotional topic,
Oh, we
and now you're
love
making me
you.
emotional.
We love you. We'll miss you.
Well, thank you, viewers and listeners, for being a part of, I guess my journey too as the co-host.
Yes.
But don't worry, Jenna will be back. So that does it for this episode of Retirement Today with our wonderful host, Jenna Carnes.